you just made a deal buying rival Gamma Point Capital today. So congrats on the deal. Let's just start there for a second. Can you give us some stats on kind of how much you paid for it and sort of the return that you've noticed in Gamma Point, in particular, as we've seen a lot of wild rides in the crypto market of the last year?
Yeah, great to be with you guys, Alex and Guy. I think one important piece for us in this was thinking about this strategically as something that augmented what we were already doing and what you guys have very well articulated numerous times on the show, which is volatility. And some investors like volatility, some investors don't. Some institutions are figuring out how to dip a toe in the space and haven't yet done it for that reason. But there are strategies as an industry matures that that can navigate volatility better or with a profile that's more appetizing to people. And this specific acquisition was with that in mind. So this firm called Gamma Point really had built the market-leading infrastructure and capabilities around what's called market-neutral investing, which means regardless of whether crypto, Bitcoin, Ethereum, the market are going up or down, it's a strategy that's seeking to profit across those different market environments, across those different market regimes. So basically, you're hedging out that volatility that makes the headlines and gets everyone's attention.
Matthew, let me have a crack at, again, at the second part of Alex's question. What was that worth to you? How much have you paid for it?
It was worth a lot. It was kind of multidimensional. There were different layers to the deal, but roughly, if I had to put an estimate on it, it was about $35 million.
Great, we appreciate that, letting us know that. So what's next? So in the middle of the volatility in crypto, how do you wind up expanding? Where is the institutional interest, and how do you sort of meet that?
So this was one of the ways in which we're doing that. Again, some investors want what I call directional exposure. Mm-hmm. They believe in the long term. They believe in the technology. They think Bitcoin's going to be worth hundreds of billions or trillions of dollars, or Ethereum or cryptocurrency and blockchain technology kind of in the abstract, in an absolute sense. Others haven't gotten there yet, but they know there's investment opportunity. They know there's what we called in my former life at Goldman Sachs, alpha. And because that exists, and they're maybe a little bit more wary of the volatility, a strategy like this becomes pretty interesting because, again, it hedges out that directional volatility and it just isolates that alpha component. So again, even in a month like May, you look at May, here's a strategy when there was blood on the streets, when Bitcoin was down, whatever it was, 35, 36%, a strategy that could potentially be up, not even just flat, but up. That's pretty interesting. So we're going to continue to put resources with the Gamma Point team. Sanat, Rahul, and Ish have built an amazing strategy and franchise here. We're going to integrate them and we're going to scale up this market neutral strategy.
What does that mean in terms of institutional interest? If you can take the direction out of it, does that encourage more institutional money in? What is your sense? Because I hear a lot about the kind of the case behind crypto, the institutional money is coming in. Is this kind of the strategy you think that will encourage that?
Yeah, again, there's two schools of thought, and I think you're hitting the nail on the head where most institutions who have to deal with more complex decision-making processes, governance, boards, committees, all of that kind of stuff, it can be a harder sell to say, hey, we're just going to go long crypto and we're going to ride the waves. We're going to ride the roller coaster. So while some have done that, I don't want to say there aren't sophisticated investors who haven't believed in the long term and said, hey, we know there'll be volatility, but we're willing to ride the waves to get there. There are some who have done that. I think by far there'll be many more who, if they can strip that out, this is going to be a much more attractive way, whether it's with BlockTower or some other way, to access the opportunities in this market. So, if you can hedge out the volatility and still produce returns, I love talking to people like you because the nature of compounding, it's very simple math, but it's incredibly, incredibly powerful. And I think as a lot of institutions have watched the industry mature, this is one component, one layer of that they've been waiting for to say that's a way that makes sense for us to get exposure.
So Matthew, to that point, how is your fund doing in the middle of the volatility that we've seen? Like, how's the track record?
Yeah, so we have our kind of our existing, firm and the strategies that we've been investing now for 4+ years. That's done quite well. I can't give specific performance numbers kind of on television, but we've been fortunate to perform strongly relative to just maybe buying and holding certain cryptocurrencies. And then separately, this market neutral strategy specifically, again, without going into specific numbers, I can say that it has posted positive returns even in market regimes and parts of the market cycle where crypto was down. Whether it was down just a little bit or down a lot, this is something that seeks to generate those positive returns. And the way it does that is through things like arbitrage or DeFi, which I'm sure you guys have talked about, decentralized finance. There's opportunities for yield and arbitrage that are kind of agnostic to what the market's doing underneath it.
Can I just talk about something that Alix and I were kicking around a little bit earlier on? And I'd like to get your take because you're certainly closer to this than I am. The Colonial hearing is taking place right now, the Colonial Pipeline hearing, the hack. The FBI was able to get some of that money back, went into the wallet and was able to retrieve some of that money. Does that undermine or does that enhance the case for crypto? Because a lot of the criticism I hear from authorities is that this is used for nefarious purposes. But if law enforcement can track it and figure out what is happening, does that remove that risk or does it enhance that risk?
So that headline, I'm glad you're bringing it up because I think there's been a lot of swirling sort of misunderstanding around it. That reinforces the value proposition of crypto and its security. So cryptocurrency, Bitcoin, was not hacked by the FBI or by anybody. Kind of the opposite, as you point out, where if someone pays a ransom or if someone does something illicit or criminal and gets paid using US dollar cash bills in a briefcase crossing the border from the US to Mexico, the FBI can't trace that, right? It's much more difficult. And it's not obvious with a blockchain in a cryptocurrency, but it's much, much, much more possible because you have this public distributed ledger that everyone can see. And there are large firms that are multiple billions of dollars in value that do nothing else but work with authorities, government agencies, and regulators to sort of triangulate and trace these movements of cryptocurrencies on these blockchains. One of them is called Chainalysis, another one's called Elliptic. There's a handful of them, and all of their customers are government agencies and regulators who can now do this kind of work much better than they could in the prior world where you're dealing with cash. So that is a positive. That's also why you're seeing every central bank on the planet move towards what you guys have talked about as central bank digital currency, a crypto version of their sovereign fiat currency. Chris Giancarlo of the CFTC is leading the charge here in the US behind the digital dollar project. And that just brings that transparency to an otherwise opaque fiat currency system.